Hello friends, this is Raj Sastry from Raj Option Trading. Today is September 9, 2021. We have a lot of great stocks that are pulling back pretty hard. Let's look at few stocks which are pulled back pretty hard in 1 week time frame and see if they're worth buying. So we got here Jaguar at the top here, $2.63 stock. Looks like stock is completely sold out with RSI 13, and we got institutions buying it 79%, and we got a performance which is negative 28% in just 1 week. We got Joby here, low RSI, tells the stock is oversold, and institutions are buying it, and performance is negative 25%. So as you scan through here, we have low RSI in many scenarios, and institutions are buying many of the stocks. For example, Jaguar, and we got here BYSI Beyond Spring, high institution buying here. And also look at the short ratio in case of JOAN. JOAN Fabric, after the quarterly earnings, stock dropped big time. There's a high short ratio. I'm willing to buy at this time slowly and accumulate. And same story with Beyond Spring. Looks like high short ratio. Institutions are buying it. Probably it's okay to buy a little bit and play along. And as you scan through here, you've got few more here, and look at institution buying here. Riot blockchain here, lot of institutions are buying Riot blockchain here. Stock has been dropping off late, even even before crypto started going down. I think it's a good one to buy at these levels here, given low RSI and institutions buying, coupled with the short ratio, high short ratio of 24%. And then you got GLBE, ISEE, same story here, very high short ratio, and RSI is pretty low here. I'm willing to look at these stocks and buy a little bit. And as you scan through here, we got a couple more here, and I think here it's okay. Stocks are down, but as you see here, from a short ratio perspective, it's not high. But I'm willing to look at few stocks like Apellis as an example. The stock has been dropping off big time. Some execs left the company. That's the reason. So we look at some of these here, and also we should look at stocks like Five Below and Smith and Wesson have been dropping pretty hard of late. So with that, let's jump in here. Look at few top news here. From a top news perspective, we got Jaguar Health here. Jaguar Health, as you can see here, we got stock split here announced, 1-for-3 reverse stock split. So I think that's why stock is doing okay, but came down a little bit. And then we got Flora here. They're launching some cutting edge cannabis distribution. I think this stock has been down so long. Probably it's worth looking at Flora at these levels. And then you got Alector here. Shares are diving. Looks like they announced departure of two high-level execs. Probably worth buying slowly. Then we got Riot blockchain here. Crypto stock has been dropping off pretty badly of late. Looks like they blew away the quarterly earnings. Their revenue and margin both improved. Probably it's good to buy Riot blockchain here slowly and take it from there. Then we got Apellis here. Looks like stock is down big time. And looks like they missed their earnings. The revenue estimates also. It may be okay to look at Apellis at these levels and take it from there. And Five Below stock dropped after the earnings. There have some issues around the supply chain and the shipping. I think maybe good to buy Five Below at these levels here. Typically when the stock drops off like this, especially Five Below, typically they come back up pretty nicely. They bounce back nicely. Then you got Chewy here. This was a Wall Street darling last year. Pet food and pet supplies. This year, I think it's struggling a little bit. It may be okay to slowly buy into this weakness, temporary weakness, and take it from there. So with that, if you look at broader picture here, we got S&P 500 or SPY. It's a 5-year weekly chart. Typically, we have some jitteriness around September-October time frame. So we have here 2017, as you can see here, September, October, we got some red candles. It's a weekly chart here. And as you go into 2018, same story. I think we got some jitteriness in September, October, and stock tanked big time in December time frame. This is the Federal Reserve rate. They increased the rate here. Stock dropped off. And then we got here 2019, same story, some jitteriness in September, October timeframe here. And stock tanked big time in April. This is March, April timeframe. This is COVID-19, huge, big drop here. And then we have in 2020 there is some jitteriness again in September October time frame. The reason I bring this up is really by looking through the stock market history here of S&P 500, you can expect some pullback in September October time frame, and also typically end of the year you got some choppiness. Look at 2018 and even 2019, same story. And as you scan through, there is some jitteriness in 2019 also. So expect some weakness here. That's why don't put all your money into the market yet. Have some money available. Take advantage of these downturns, so that way you can play along. So with that, from a indices perspective, top ETF perspective, S&P 500 is a little bit weaker of late. As you see here, it's trying to hug the 25-day moving average here. We have to watch out here. Probably it will drop to 25-day moving average, or it might even drop to 50-day moving average, which is this blue line here. And then you got QQQ, same story, showing some weakness as you go forward. This might also come to 25-day moving average, or even bump into 50-day moving average here. And then you got DIA, which is Dow Jones Industrial Average. This already came to 50-day moving average, which is this blue line here. So this is why you got to be a little bit careful here. This might even come down a little more and hug 100-day moving average, which is 344, like it did back in July time frame. And then you got IWM. IWM is really typically leading indicator, Russell 2000 here. As you can see here, IWM is really bouncing around say 50-day moving average or so. So this also can drop nicely into even 200-day moving average, as it did back in August time frame. So we got to be watching out for some downturn, as you can see here, through these major ETFs. So have some money available, take advantage of temporary weakness, and take it from there. So with that, let's look at top stocks to buy on a pullback here. At the top, we got Jaguar, huge pullback, reverse split. Stock has been really struggling a little bit. If you look through here, 6 months, 3 months, and so on and so forth. A low RSI. And as you scan through here, institutions are buying here. That's a good sign. Institutions know, when the stock drops like this, it will recover. And Jaguar has got a 1 year 178% growth here from a performance perspective. Even though right now there is some sales growth from a 1 year perspective, but quarter over quarter it's negative. So as a contrarian investor or a trader, you could buy some Jaguar into this weakness slowly and accumulate. And as you scan through here, you can also look at Joby here. There is some insider institution buying here. It's an aviation play here. I think this also can bounce back. Low RSI 38 here. I think it's good to buy a little bit here and take it from there. And as you scan through here, I've highlighted a few stocks. You can also look at other stocks here like Pixelworks, which is also dropped off pretty big time. But as you scan through here, I've highlighted here JOAN. JOAN dropped off big time. There is a high short ratio, as you can see here, 11%. And they got pretty okay gross margin. I would be willing to look at JOAN, Alector, BeyondS, same story here. With the Alector, you got the sales growth also here, positive sales growth. And both Alector and BYSI, they do have higher short ratio, with Alector 9%, with the BeyondS 16%. BeyondS has a higher valuation, as you can see here. And then you got Riot Blockchain and GLBE. I think Riot Blockchain with the institutions buying here, I think it may be good to consider buying slowly and accumulate a position here. And GLBE, I think there is a short ratio of 23%, which is pretty high. Stock has been dropping off of late. It may be okay to slowly buy and have a good position here. And as you scan through here, look through institutions buying here. We got HOFV, Hall of Fame, BGFV Big 5, and even EOLS. All of them got high institution buying. It may be okay to look at these stocks here and look through the RSI here. 49 for HOFV, it's okay to buy. Big 5, it's a little bit high from an RSI perspective. I would wait for a little more pullback here before I jump in. But EOLS and Chewy, you can buy at these levels and take it from there. And Smart Sheet, I think it dropped big time yesterday. I'm willing to slowly look into Smart Sheet and buy slowly into this weakness. So next we got a couple more here. We got VIZIO, BBBY, Harmony Gold, Beachbody, all dropped big time. As you can see here, in 1 week they dropped big time. So if you're a fundamental investor, you could look at stocks like BBBY, which has got a quarterly sales growth here, and even Harmony Gold for that matter, it's got a yearly sales growth. And I think as you scan through here, both Bed Bath and Beyond as well as Beachbody, they got institutions buying, even Harmony for that matter, there's institution buying as well as VIZIO. I'm willing to look at some of these stocks here given their low RSI and dropped off big time in a 1 week time frame. And as you scan through here, we got BTBT, AEO, Poshmar. I think BTBT has been dropping off late along with the crypto cohort. It's good to slowly jump into BTBT slowly and take advantage of this crypto falling off in the short term. And American Eagle, I think stock dropped after the earnings news. I think it's good to buy into this slowly. And Poshmark, as you can see here, stock has been dropping off late. There is a high institution buying. I'm willing to buy Poshmark at these levels and take it from there. And then you got Sorrento here, low RSI 43 here. And there is a sales growth as you can see here. I'm willing to buy Sorrento slowly. There is a high short ratio as you can see here. And as you scan through, we got a couple more Jumia, SaaS, and MQ. And as you scan through here, Jumia as well as SOS has got high short ratio. I think it's okay to buy slowly into this weakness here. And MQ here, I think it's showing some progress in the 2 week time frame here. So I think this also has got from a short ratio perspective 9% here, low RSI. So it's okay to look at MQ, buy some MQ here. Then we got here SAVA, which is a stock bounces up big time. I think it's okay to buy slowly into SAVA here. It's known to bounce back pretty well. And then we got Clovis Oncology here, $4 stock. As you see here, institutions are buying into, institutions are buying into Clovis Oncology here, and low RSI. It may be okay to look at Clovis Oncology here. Next, we got a couple more StoneCo, Brazil-based fintech play here. Stock has been dropping off big time here, low RSI. Institutions are buying slowly. I think it's okay to buy some. And we got a couple more here, Ouster and FuelCel. Both have got high institutions buying here. And as you scan through, both of these have got high short ratio. It's okay to buy into these slowly and participate in the short squeeze as you go forward. And then you got Robinhood. Robinhood, I think it's one of those favorite meme stocks. Right now, stock is dropping off as you can see here. It's okay to buy a small position into Robinhood here. Given I think its short ratio is manageable 3%, but I think it's a good one to buy and hold and wait for the short squeeze candidates. This is a favorite meme stock as you all know. Then we got Zella here, institutions buying, low RSI as you can see here. Short ratio is 20. This can also cause a short squeeze as you go forward. And we got a couple more here, Ring Central, Woozy, Petro Brazil, Marathon, Home, and Uptech here. All of these have got institutional buying. In addition, even INMB has got a high institution buying here. So I would be willing to look at these here. Also watch RSI levels. If the RSI levels are high, like INMB, wait for a little bit. No need to rush into. But low RSI, like below 50, you could buy those into this weakness and participate in the short squeeze when there is a short ratio, high short ratio, like VZI as well as Marathon Digital here. And last is AMRS, high short ratio, as you can see here, 11%. Institution buying 21% here. I think it's good to look at this one also. And F4 looks like there is some institution buying here, but stock has gone up off late. I would be willing to wait a little bit. Given RSI 66, it's better to wait a little bit on F4. So with that, we got a couple more here. Go to, looks like Chinese online stocks are making a small comeback slowly but surely. I'm willing to venture into this little bit as a trading opportunity and take it from there. And then you got Roku, Trade Desk, HiMax, McAfee, UiPath. All of these, if you look at HiMax here, there is an institution buying here. It may be okay to buy some HiMax at these levels. And look at the short ratio here. We got HiMax with a high short ratio of 12% that can cause a short squeeze. And then we got BioMarin here, $76 stock. As you scan through here, so this has got a low RSI of 43 here and short ratio of 6%. Stock has dropped off big time here. It's a nice biotech stock out. Looking to BioMarin at these levels. And then you got a couple more here, CBAT, DBI, IBIO. As you scan through here, DBI has got high insider buying and also some institution buying. CBAT, there is a high institution buying. I think I would be willing to look at these stocks here and take it from there. And as you scan through here, DBI, high short ratio, and AMPE, there is also high short ratio here. These can cause short squeeze. Then we got a couple more here, ASTR, APP, Mind Medicine. As you see here, many of these stocks have got high institution buying. That's always a good sign. As an example, Astra, its stock has dropped off so big. I think there's a high institution buying here. I'm willing to buy along with these institutions here. And I think in case of AMPE, there is a high short ratio here, which can cause a short squeeze, as well as APP here, 9% short ratio. And we got a couple more here, PACB, Yext, and Stitch Fix. I think we should look at all of these here with the with the PACB high institution buying. Same story with Stitch Fix here. And they also have got, at least Stitch Fix has got high short ratio that can cause a short squeeze. So with that, you might wonder when to buy and sell stocks. This is some quick cheat sheet for you. Look for RSI less than 55 on the balance volume rising. That indicates smart money is still flowing into the stock. You should look at buying in those scenarios. If you already have the stock, you should look at selling slowly when the RSI is above 60 on the balance volume is falling. That tells you momentum is fading off at this time. It's good to sell if you already have it, but don't buy. Wait for a pullback here. Always buy and sell in stages. When the stocks are consolidating for a while and showing for some signs of bullishness, that's when you jump in and buy. For stocks nearing 52-week high, look for pullback before buying. And for stocks nearing 52-week low, look for a sign of price increase before buying. And when the stock has a huge drop, look for a sign of progress or a bullishness before you commit your money. And when there is a high short ratio, that can be a good catalyst, especially when stock is sold off. In those scenarios, also look for insiders and institutions buying the stock. That shows the conviction from insiders and institutions. Also, fundamentally good companies with the positive sales growth and gross margin, those are the good candidates. Look for rule of 40, quarter over quarter sales growth plus gross margin greater than 40. When there is a secular biotech stock which is down big time and a bad news, or a technology company down big time, it's okay to buy slowly into the weakness, even though it looks like you are a contrarian. But have a small position, watch the stock, then add more as there is a progress. And last four are really for option traders. If you're a call option buyer, look for low RSI and low implied volatility. That's when you buy call options so that you don't pay too much money. Especially look for fundamentally good companies as you do this. And if you're a call option seller, look for high RSI. You want the stocks to be overbought so that way it may come down a little bit. And look for high implied volatility percentage so that way you get nice premium to sell call option at a higher price than current stock price. If you're a put option buyer, look for high RSI. You want stock to come down. High RSI indicates stock is overbought at these levels. And also look for low IV. Low IV rank, make sure that will make sure you are paying not too much premium. You are getting you are not paying too much premium because you're a buyer here. And if you're a put option seller, look for low RSI here. You want the stock to go up. When the stock is oversold, that's why you are buying the put option at these levels. You're looking for a bounce back here. And also look for a high IV because you want more premium. When IV is high, premiums are really high. So these are some cheat sheet for you. So with that, thank you very much. Happy investing and trading. Please subscribe.